Good afternoon. This is Brad Dennis with BIS Commodities with your weekly wrap-up for the first week of June. This week, we've seen outside markets have somewhat of some influence over our corn and bean markets, but mostly the outside markets, meaning the equity markets, have been quiet this week. Everybody was waiting on jobs data, which was released today. The jobs data, which they expected at about 160,000 more non-farm payrolls, was only 38,000. So with that sub number, we saw stock market fall off and actually finished the S&P or the E-minis lower than last week by about $1. Two sides on this trade right now. When the initial number came out, stocks were sold off. That's reflecting the poor growth that lower non-farm payroll reflected. On the buying side, though, buyers are going to buy up the stock market because they feel that with this lower number, you will not have a June, possibly even a July rate hike. So those are the two sides. At the end of the day, we closed about $6 lower in the S&P, and like I said, lower on the week by about $1. The lower non-farm payroll number also wreaked havoc on a stronger dollar. We were down $1.50 in the dollar index today. That has caused not so much a lower dollar by commodity type of trade out there. It's more of a, hey, we have to postpone any rate hike till later. That's why the dollar is a little bit lower. Also, you look at the energies are down. Now, overnight, usually Asia likes to see that lower dollar and they'll buy up commodities. Today, though, energies were reflecting the poor growth in the U.S. equity market and as well the lower growth over in Asia. So it was more of a growth trade than a dollar commodity trade today. Over in the cattle markets, we saw some sideways trading. On Monday, we filled a gap that was created a couple weeks ago in the June cattle, and we stayed up there. For the week, we saw some 202s trading in here in Iowa. Puts around a 128 price on them. The big thing that going forward, though, is that the kill rate for the week has been running over 580,000 as of late. Last year we only had 2 weeks where we had 580,000 killed. This year we've had 6 weeks already. So the weights are coming down a little bit. They're killing a bigger number, and that should be positive down the road for cattle. Also positive for cattle down the road is the hog price. Hogs have rallied and continue to rally today. We're looking at some business that is being sought after from China, and that went towards higher prices today along with the good exports that were reported. In corn basically can be called a follower. With a bean market that's been on fire, with the front end of beans rallying, I think at the beginning of the day it was up 57 cents for the week, or actually I think we had a 48-hour period in July beans where we've rallied them over $1. Really put the old crop, new crop spread out of whack. Today we saw some profit taking in that spread as it relaxed some, I believe 15 cents or so. But you have money flow still going into the beans. Today was a profit taking day. Meal, you still have money coming in meals, and meal made new highs for the move, but did close lower. The big thing on this lower close is that when we had our big run up on Thursday, we did not see open interest in corn and beans follow suit. So that's showing a little bit of a give up trade there, and maybe we do start to sideways trade a little bit. I think it'd be tough to say that the funds are done here. I think that they'll still put their money to work. It has paid off for them. The next issue is going to be how do they take their profits? Do they just roll them out, or do they step aside from the market? Also, we're entering into the summer trade where a lot of risk premium is put into the market, typically in new crop, on the Friday before the weekend, just in case those maps turn hot and dry. And then on Monday, they're taken out. I would suspect on Monday also we're going to see some pretty good to excellent ratings on corn. Also, one thing to look for down the road will be any kind of China buying of beans. That was the big rumor as well that put us up to that $11.69 high today. Our export sales disappointed somewhat, and that was another reason that that old crop new crop spread came off some. We're going to be looking at weather very hard. We're going to see if those if any new sales are for the old crop or new crop in beans. Also, we're going to continue to hear about lower ending stocks numbers for our report that'll come out next Friday, the newest S&D demand sheet for June. Now, in that demand, they will not mess with acres at all, but they could tweak yield if they see fit, and they'll definitely look at where demand is. Right now, the trade is probably trading a sub 250 carryout for beans. Last month it was 305. In corn, they're probably thinking demand's up another 25 to 50 million. So maybe you're trading a 2.1 or a 2.05 billion carryout. Still large carryouts, but we haven't gotten through the summer, and we don't really know what the crop is yet. Once we get a little bit more comfortable with the crop, then that bigger carryout will weigh on prices. So next week, like I said, on Friday, you've got your supply and demand report. Probably a green light to buy right now because of the rally in July beans. The natural seller, the hedger, is out of there. It's just a matter of whether or not they want to start taking some profits. Whereas in corn, December corn, the natural seller did show up on Thursday, did show up again today, and another layer of sales were made at that 420 level. So that is it for the first week of June. End of broadcast.